Hello, YouTube. We are back. Welcome to the 27th episode of the Jacked of All Trade podcast. My name is Brandon. I'm the Bull of Bay Street, and as always, I'm here with David and Kaylin. Guys, how you doing all the way over in Canada?
Probably not as nice and sunny as you are there in Florida.
Yeah, it's pretty good over here. Just enjoying the weather, and it's nice to have a nice change in scenery. But how about
Yeah,
we just get right into it and start off with the market recap?
let's do it.
So it was a holiday shortened week as US indices were closed on Monday due to the 4th of July holiday. We closed right where we left off last week with the Nasdaq and the S&P at all-time record highs. Guys, I am not getting tired of saying those words, all-time record highs.
Yeah,
With that
yeah.
said, the Dow and TSX are continuing to trade sideways, and I think we should look into that in just a little bit. But let's talk about some key events for the week. Firstly, the release of the Federal Reserve minutes on Wednesday, where we learned one, that inflation is transitory, and two, that we're making a slow and steady recovery in the labor markets. Everything here met market expectations. What is interesting, however, is more talk about reducing the size of the balance sheet and a reduction in monthly bond purchases. Personally, I think it's all talk and no action. I call it Fed posturing. The Fed likes to do that a lot, where they continue to say something meeting after meeting to kind of get the market ready and not catch anybody off guard. I think it's really nice that they do that. It makes for a very smooth and orderly transition when they actually do something. So nothing tremendously noteworthy there. And that's why I think the market reaction was rather muted in response. Does anyone want to add anything to the Fed minutes or the Fed policy?
Yeah, no, there's a few economists that I follow that I kind of like. I've completely disagree with their assessment this week because they all seem to have flipped. It's like their opinion changes based on what's happening in the market, right? So it's like when the bonds are selling off, everyone's like, "Oh, inflation's coming," and then now the bonds are being bought up. They're like their whole narrative has changed, right? And it's just like if you, so for me, it's like if a person's going to be wishy-washy like that, how much leverage can I put into how much stock can I put into what they're saying, right? So it's kind of been a disappointing week for me. Ken, your thoughts?
Yeah. I mean, I'm far from an expert in economics and bonds and all that kind of stuff, but I mean, like just from what I'm seeing in news articles and stuff like that, it literally just seems like all these guys that are making these comments are just following the day to day. If bonds are down, then that's what they're talking about. Bonds are down and this is what's happening. And then the next day, if they're bouncing, they say, "Oh, everything's turned around and now this is happening." And then they sell off the next day. It's just like every day it's just like it's just almost like a daily recap of what happened in that little snapshot. It's not really like a big picture thing from what I'm seeing.
I agree with that.
Yeah.
I
Sorry,
think it's
go ahead.
really important to follow the bond market for sure. I always say the bond market's the smartest market out there, but you definitely can't be watching the daily gyrations. You got to watch the long-term trend of these things, and yields are going down. Like it's a long-term secular trend here. So for people a couple weeks ago, they were calling for like 2 or 3% on the U.S. 10-year. To me, that was just crazy. And we've just been reiterating on this show the rotation from value to growth. And at least David and I were having that talk in private and in public several times about how we envision more of a lower rate and lower yield environment for years to come, lower for longer, as they say. So yeah, a lot of guys on Twitter and a lot of economists or strategists are talking about now they're talking about yields going down, but that's really just no surprise to me. I think everything that the Fed said, at least to the three of us, it made a lot of sense.
I think a lot of them just are suffering from like a bit of ego. Like they made some bold proclamations out there and it didn't work out that way. Now they're scrambling to kind of like make the reality fit what they're saying. I think that's the disappointing part for me.
Yeah, I feel like it's probably a tricky spot to be in too, because like I just think of like, I think of myself as a trader and stuff like that. Like I don't really like calling stuff and predicting the future because nobody can do that, right? Like anybody who's a trader and investor, it's all best guess, right? It's all your own education, your own data you're putting together, and it's just the best guess, right? The market could do the complete opposite of what you think it's going to do or what it should do, right? So there's no way to really accurately forecast, like for any of us, even the three of us, like we make our best calls, and that's pretty much all we can do. And like same with these other guys, right? But it's probably, I think it's got a big psychological component too when you think about it, that think of you're the guy on the news who like everybody's listening to, and like you have to say something because they're like, okay, you're on the news tonight, you have to say something, right? So you can't just go on there and be like, well, I still kind of think it's what was happening before. Like, you gotta elaborate, you gotta give some more information, like, the details, get people talking. So it's like, that's why, we've said a few times on this show, like news and stuff like that, there's such an element of like of just news. Like there has to be some like gossip, for lack of a better term, in what they're saying. And then it's taking what they're saying, kind of reading between the lines, doing your background research, and that's how you get to the actual facts and the answers behind it.
Yeah, I agree.
And that's what I love about this show is we're just given the straight facts and we're just talking as a group of buddies that have a deep interest in the financial markets. And there's no hidden narrative. There's no ulterior motives here. We're just talking about the markets and just saying it like it is.
Yeah, I like it too. I mean, like all three of us have said, we've learned so much from each other because we all have different trading styles, different indicators, different connections, and we just kind of pool all our different ideas together. And if we're all kind of coming to the same conclusion from three different angles, then we kind of assume that we're on the right track.
Exactly. And when we do disagree, it makes for some good conversation and allows us to kind of see things through different lens.
Yeah, for sure.
Yeah. Like we the times that we disagree, I learn a lot, I gotta say.
Yeah.
Kind of like yesterday, was it? You sent me, it was Air Canada. You said you wanted to short Air Canada, so I just typed in AC, and it was a completely different stock, and you're like, oh yeah, I think this thing's broken down. I was like, no, man, that's a terrible chart. And then I'm like, oh, on the TSX, and then I pull it up. I'm like, okay, yeah, now I can see it.
I blame that on your habit of looking at a ticker instead of the company name.
Yeah, I don't usually read the company name, just the letters.
Yeah, that's day trading problems, isn't it?
Yeah, short-term trading problems 101 right there.
Exactly. I think that's a good sort of segment to move on. You're talking about Air Canada, and we should definitely talk about what happened in the markets on Thursday, because Thursday was a really interesting day for global markets. It was a volatile one, as new coronavirus fears surrounding the Delta and Lambda strains caused a pretty significant market sell-off. I'm not sure what the exact catalyst was. It could have been the news about Japan banning fans from attending the events at the Olympics this summer, but Asia led the declines on Wednesday evening. And in response, the next day, Wall Street gapped down hard at the open. At the one point, the Dow was down about 600 points. The markets did recover, but I think we need to understand really what led us lower. And I think it was stocks like the airlines, the cyclicals, and the epicenter stocks. I really hope that none of our viewers are surprised by that, because ever since coming on this show, I've reiterated my bear stance on the cyclicals countless times and the reopening stocks. And we've all made the case for investing in high quality, non-cyclical and growth companies like Amazon, which is actually interesting that despite the broad market weakness, reached all-time price highs, $3,700 a share. I remain bullish on that. But I think we just need to recognize something's happening with the markets right now, something deeper. There really is a rotation from value to growth right now. And, although the markets did recover, Friday was a great day today. The Dow was up 400 points. The Nasdaq was up like 140 points. I think now is not the time to be throwing caution to the wind. We talked about market breadth a few months ago, and I was super happy about that. We were seeing everything participating, and that's just not the case right now. Energy, financials, industrials, materials. Definitely later on want to hear your take on the small cap and how they've been responding, but generally, I don't think that's been very good. And despite markets hitting all-time highs almost daily, not everybody's participating. Do you guys have any thoughts on that, on just market breadth and how it's really just been the big cap tech stocks leading the way?
Kinley, you have any thoughts on because I have some thoughts on the psychology behind it, so I don't know if you're seeing it in the charts, but like the way I'm looking at it is because the markets are near all-time highs, it's almost, I think there's a group of investors out there kind of looking for a reason to sell off. And so they're taking any catalyst that they can, right? And we even forgot to mention this week we had the China thing. They clamped down hard on Didi, and so a lot of the China stocks, they got sold down too. So it's like there's a couple of things that happened, but no, I don't think we could point at any one incident, but like there's a couple of things that happened within a short time span. And I honestly think the market just reacted because it was like it is at all-time high number, so everyone's kind of looking for a reason to size out a little bit, you know?
Hmm. Yeah, I think that definitely has something to do with it because you know you got to look way back too for the long-term investment. Like guys that were buying kind of near the bottom of 2020, right? Like you're talking like massive percentage gains pretty much across the board, right? So you know we had that big run up in 2020. We consolidated for a while. Now we've had this next leg up. So you know at some point there is going to be certain people taking profits, and that's you know that's just healthy. I mean, there's going to be a lot more people on the flip side of that who are watching it go up just you know begging and waiting for a pullback so they can buy into it, right? So it's the same old thing that the market always does, right? You know, people take profits and then everybody who missed the big move, they're just eagerly waiting to buy that pullback. So I think in my opinion, if as long as you're in the right stocks and you're on the right side of the market, then you know you just hang on and ride those dips out and you'll be okay. Like anything that has to do with reopening or you know like airlines, like I've said that, you know, I was saying that months ago still, like all that stuff, the cruise lines, like, oh, you know, you think they're going to go through the roof when everything reopens. And like, to me, it's just like, that's kind of like a hold and hope scenario. Like you're betting on this virus, you're betting on the world that, you know, you don't really know what's going to happen. You don't know if people are going to get sicker. You don't know if it's going to shut down again. Like there's way too many just gambles and what ifs for me personally to be comfortable putting my money in something like that. And I just don't think that's a safe bet. I mean, it might pay off huge, but it could also fire big, and I don't like that kind of stock personally.
So I agree with both of your sentiments there. Um, but when we're talking about taking profits because the market's, you know, been running for so long, I see that with the cyclical stocks because the cyclical stocks, they were on a tear. You know, January, February, March, they led the way. And these stocks are way stretched above their, you know, 50 or their 200-day moving averages, and they need some time to sort of catch up and consolidate. I think it's more of a reversion to the mean towards the downside. But then you have stocks like, for example, Amazon, which was consolidating for a year, and it's literally the best company in the world. And you literally had a year. It was a buy on a silver platter. You were able to buy it from like 2,800 to like 3,500 for a year, and now it's just starting to break out. So I think we're just going to see flows towards that. And I think a lot of the fast money is going to say, hey, what I'm in right now is not working. Why don't I bail and go on something that's actually working? Amazon, like 37, 3,800, 4,000. That seems like a great buy. So I think like with Amazon, it's just the beginning. We're in literally the first inning of this advancing phase of the Nasdaq. As you guys know, like it was June 22nd, I believe, that we broke out of a 6-month consolidation in the Nasdaq, which is really long for an index that has led the way for the last, I want to say, 11 years. And we started this new advancing phase. So I think now's a better time than any, David, to pop up the Nasdaq, and we can look at that. And for anyone that's
Kalen's got Kalen, you got the trading view on, right?
Yeah,
Pull it
yeah.
up.
What's the ticker for that? IXIC, is it?
Yeah, I was just gonna say, to adding to what you said, Brendan. I think a lot of the money is going into not to quality tech stocks, right? Because I just noticed today that Apple's up like 10%. Like it was like flying around the $125 level for like months, and I just checked it. It's like 145, so it's up like 10% or so.
Yeah,
And I'm like,
yeah.
So
That
it's
was,
interesting that you say that because I actually have context on that because I follow these FANG stocks or these big tech stocks like, you know, really, really in depth, of course, because that's my bread and butter, right? And Amazon's literally been consolidating since they announced the new iPhone, the iPhone 12. That was almost last year at this time, like let's say give or take like 10 months. So um, it's been consolidating for a really, really long time. And these companies are like major components on ITSIC, on the Nasdaq. Like, I think Apple's something like 11% of the index. I mean, I think we're talking Nasdaq 100 here, but
Yeah,
still, you got
yeah.
Amazon, you got Apple, you got Alphabet, Facebook, Microsoft, Nvidia, Tesla. These names, like, 6 or 7 names can move the whole index, and really nothing else matters. And that's why I think the Nasdaq is just it's the key to the market. It's been leadership in the market since this bull market started. I want to say in 2013 when we broke above the double top in 2000 and 2007. So the Nasdaq's leadership and always follow leadership.
Sam, can you pull? Yeah, there we go. Beautiful.
Yeah, it's the Nasdaq here.
So if you can just hover over June 22nd was the day that I marked.
June 22nd, right there.
Yeah, so that was a really important day because that marked the breakout above those two failed breakouts. One in, I believe it was May and March and February. So we had a couple of times where we tried to break that 14,000 level. It proved to be pretty strong resistance. And right now we're running into our first volatility event, as I call it, of this new advancing phase.
It looks
Yeah,
like it was
that's nice.
almost a straight line. Sorry,
Yeah,
guys.
nice little pullback there, though.
Is that daily? Yeah,
Yeah, it's a daily.
nice
So I
recovery last
really
few days.
like this chart because it's kind of like we're stair stepping our way upwards. We take like 2, 3 steps forward and 1 step back. And I think for the NASDAQ, a volatility event like this is perfectly natural. You have, a couple percent setback. It's sort of a time correction mixed with a price correction in a way. Like you just have to consolidate for a couple days. I think this thing should be through all-time highs again in a couple sessions, maybe even the week after. But when you compare it to something like the Dow Jones, which I believe is DJI on TradingView.
Yes.
Exactly. I see a little bit of a different picture here. We're consolidating here, which is all fine. But when you look at the core components of it, I start to get just a little bit worried. For example, one of the biggest names, if not the biggest name on the Dow, is Goldman Sachs, and you can pop that one up, GS. This is a chart that I do not like at all. There's a head and shoulders brewing here.
Mm,
I want to know what you think about this one, guys, because
that
the
was
financials are out of favor now.
that was a big failed breakout right there.
I'm just not sure if financials have the juice to make new highs right now,
Yeah,
especially with the lower yield, lower rate environment.
yeah, that's interesting. So
What's the bulk of their business? Is it lending? Because they wouldn't have done that much in the last year, 18 months, right? With the
Well, they
lockdowns.
do a lot in investment banking, and it's been a
Um,
big year for IPOs for sure. But yeah, I think the lending side of it for sure definitely is big when, rates are so low and they're going to be low for a very long time. We can look at the US 10-year after this. But the other thing is the economy maybe not being as strong as people initially
yeah.
thought, and a little bit of decelerating growth next year. We talked about this last time. If we have 6% this year and 3% the next year, and who knows the year after that, may not be yeah. So you got the US 10-year yield right here.
yeah, it's funny. This is this is actually like a beautiful short setup that I like to play. Obviously, in a much shorter time frame.
Really, can
That's
you go into that a little bit? I'm really curious to hear.
well, this is like one of my favorite short terms. This is like one of the ones that I was showing you guys earlier. It's basically, you look for something that's been downtrending for quite a while. You get this drop off, and then it kind of breaks, down here. So we have this line, this 140s line sort of thing. And then as soon as it breaks that low, you wait for this big bounce to come back up, and then you short it right where it breaks down. So like right here, you see how it was trending down. We had this kind of trend shift where it starts trending back up. Right there at this point, that's where it broke, right? That's where it broke and reversed again. That's right where I would hit it short every time. And look at that. Like even it's hilarious. Even on the bonds, that same pattern still works.
Yeah, it's funny that it hit it like almost like
Yeah.
to T.
So like the way that I would play this personally, and like I don't know if it's gonna play out like this, is I would basically do something like that. Oh, I would do something like that, and basically, like what I would do is I'd start in small here at this level, and then as soon as it broke through that uptrend line again, I'd be full size right there, and I'd ride this all the way down to that low. So I'd ride that down to 50 cents if this was me playing this.
Okay, so I really think that you're onto something. We have so many factors, like we were talking about this last time, whether it was just, the population and the technology and everything else, which sort of is conducive to lower interest rates and lower yields. But the coronavirus fears and fears of more lockdowns and everything else, like, we're not trying to speculate on that. But at the end of the day, I always say, listen to the bond market. And the bond market's definitely trying to tell us something right now. And the bond market, I said this last time again, but I'll say it again, is the bond market right now is telling you to buy stocks. It's telling you to buy growth stocks. It's telling you to buy dividend stocks. It is not telling you to buy economically sensitive stocks, which are the exact stocks that sold off on Thursday. And I do not think that this sell-off has reached a crescendo. I think we're going to have to revisit this. I think that the Nasdaq could be in good shape because a lot of the names are less economically sensitive, they're non-cyclicals, they're going to grow regardless what the economy does. But these economically sensitive names and these epicenter stocks, they could be in some deep trouble.
I
And I
just wanted to point out something interesting. Like Kaylin, you were pointing out that pattern that you played, right? And you like you just instantly recognized it, and you knew exactly what to do. The
Yeah.
funny thing is, like, I wanted to point this out because like this is how people can use the same tools or not use the same tools. It's like I feel like I'm blind when I can't see the volume because the bonds don't show the volume, right? And so like for me, it's a huge thing in my trades because I kind of use it as confirmation. But I just
Yeah.
found it interesting that you don't at all. Like you know that pattern so well.
Yeah, yeah. No, it depends. Like I'll use volume. I do use volume. Like I just don't have it up on TradingView. Like I have it up on my actual like DOS Trader thing. To be honest, I just don't know how to use TradingView very well.
So it's really funny, Kaylin, because you use the exact setup I use. You use two moving averages. Looks like, what is that? Is that a 50 and a 200?
Yeah, 50 is the blue, 200 is the yellow.
Yeah. So, and then you have some sort of momentum oscillator. What is that? RSI?
Just the RSI 14.
Perfect. Yeah. This is literally the exact setup I use. I do some other, fancy charts. Like I have a Ichimoku preset, but this is like my favorite preset. I find it just super, just easy to use, intuitive, and it works really, really well.
Yeah.
So do you use the RSI to confirm the moves that you're seeing on price?
I don't personally. I use it kind of like it's not really something I use to determine whether I'm going to go in or out of a trade. It's more so just kind of like a background thing. Like I'll
Yeah.
trade based on the chart, and then I'll kind of look at that, and if it's fairly in line with what I'm thinking, then I'll be I'm like, okay, that's just a little bit more confirmation. But I mean, for me personally, even if the RSI doesn't fully agree, that's not really going to have too much impact on my style of trading.
Oh, that's
But
super interesting.
yeah, that's just me, anyways.
Brendan, you got to show me
So,
Ichimoku Cloud one day.
oh yeah, we definitely should do a whole session on that because it incorporates so much data, and when you first see it, if you're not familiar with Ichimoku, it can be like a pretty daunting thing. But once you actually get the hang of it and you do the work, it's incredible. There's just so many data points,
I, I
and
spent I spent the day just trying to learn the freaking names of the clouds. Like
yeah, the
it's a little
names of the
hot, man.
clouds are interesting too, and it's not like there's some things that you use like when moving averages cross and whatnot, but there's other things like the CQ span, which is like the lagging line. It's just really interesting how it uses previous data and it uses data in the future too, versus a chart that like we use. We're all just looking at like the current data right now. So we can definitely get into that. But Kaylin, I wanted to know what how your week was in terms of the short-term trading and the small caps, because it seemed
Yeah, I
like
just wanted to just take a minute here to touch on I'm not going to talk much about AMC because we've already looked at this, beating this thing to death. But basically, we all know that all the new small cap guys are kind of locked up in this thing right now, right? So we've gotten this like pretty ugly daily chart going on. So like, I mean, this to me, like, yeah, it could reverse and everything. I really don't know how much the 200 and the 50-day moving average are going to play into a stock like this. Like, I don't think that anybody's trading this thing really cares about those levels. But as far as I'm seeing it, like overall, it's still on the upside. So I do kind of want to point that out. Like if you're drawing this line kind of right across, like we're still uptrending here overall. So like this is still front side of the move. Shorter term, it's backside. Like if you draw a steeper line. So overall though, like I wouldn't be shorting this thing personally until we got under this kind of trend line here. Like if we smashed right under that, we were kind of like into the 30 area. That's when I could just see this thing absolutely crumbling. But until that happens, I'm not fully convinced it's over. But regardless, I think what happened is, last week we had this pretty significant sell off after hanging on for 2-3 weeks or whatever it was, and we were just seeing a lot of the really small cap, like super like low float, micro float stocks just going nuts again. And to me, like anytime you can almost watch the money flow in small caps because it's all the same people playing it, right? So as soon as you see something like this where a lot of people are in it selling off, to me that kind of alerts me to be a little bit more on guard when I'm shorting stuff. So like I always say, front side versus back side. So basically all you're doing, you're just drawing a trend line up, and if you're on the front side of the move, you want to take front side covers, right? Because I'm predominantly a short seller, which basically means say you're looking at AMC for something like this, I'd short here, say, and I'd just cover into the first wash, right? Like that's all you're looking for. Whereas on backside, like if I was shorting over here, I'd be shorting here and I'd be looking to cover like way the hell down here, right? So if you're on the backside of the move, that's when you can really get big on size, really let the things fade. But front side of the move, you just got to be quick in and out. So basically what I'm seeing here is, we get this bit of a sell off, and I kind of wanted to just show quickly here, like obviously we had NEGG.
Yeah, I was about to say NEGG had a very wild week. Funny story behind that one, but we're not going to get into it. But it was an absolutely face-ripping rally. What was it on Wednesday? I believe the stock was up, like 148%?
Yeah, something like that. We took off here, $10, $11, and it pretty much went straight up to 70. And
do you think that's a bull flag? Like
sorry?
do you think that's going to be a bull flag? Those last like two candles, low continuation, or is it just way up in the air? Because
it's really just up in the like when I go to something like this, like if I go to like say a 30-minute candle, like that looks like right now that could go either way. Like if it breaks out over top of this, I mean that thing could just rip your face off and go up to $100 pretty easily. But if we break down below this, this 44 area, then I think we're probably coming straight down to like 27.
So
right?
I'm not a meme stock guy, but I think there's a good chance that this thing's gonna break higher.
Yeah.
I've just been so like astounded by what's happened in the markets this year, and I've come to the realization that I think that meme stocks is now just a thing in the markets. Like there's a group of people that just want to gamble in the markets, and as you guys point out, they call themselves apes, and they don't really have a lot of respect for their money, but they just want to have a little bit of fun with Reddit and these online chat rooms. So it wouldn't be surprise me if NEGG is the next little meme stock for the next little bit. I've realized that anything is now possible because of the internet.
Yeah, for sure. I mean, this is just, this is the kind of stuff that, we've seen in small caps for years and years. So it's not particularly new. I mean, we might see the frequency of it going up and stuff like that. But the thing that, I think a lot of the new traders, that's kind of why I wanted to point this out is, if you look at AMC, it's got like what, a 500 million share float or something like that. It's like a legitimate company, all these kind of things. One of the things that you do really have to be careful about that I want to caution on these smaller stocks and stuff like that is I've seen it happen before is, when you get these massive moves, the SEC on these really junky companies, the SEC can come in and they can halt these things pending investigation for months at a time. So that's just kind of one thing I wanted to point out is like I've seen these stocks do moves like this, and then they'll get, they get a day where it rips up and then it just halts. And it might be 3 or 4 months later when it opens, and it might open, might close at $90 and open at 80 cents.
So I've seen stocks get halted that never open again.
Yeah.
Ever.
Yeah, and then you lose everything.
Yeah, I've seen a lot of stocks like that, and I've seen a lot of people absolutely lose their shirts.
Yeah.
They don't even have the opportunity to sell. They say, "Oh, I'll sell when it breaks this trend line, or I have a stop loss in, or whatever," but they don't even have the opportunity for that, which is really sad. But I think we all need to recognize whatever you invest in. Warren Buffett has a quote on this actually. Invest in companies that if they were closed for 10 years, you wouldn't be nervous about holding. Companies that you would really believe in, that if the market just was closed, that you'd be confident that when it opened, that you would have a good investment there.
Yeah. Yeah, so that's kind of why I wanted to bring this up. I don't want to say don't play these or anything. I just just my own word of caution from doing these things for years is that kind of stuff can happen. So like, you never want to bet more than you're willing to lose every penny of it. Like if you can't afford to lose every penny that you just bet in a small cap, don't put your money down because it can happen, and it's happened before. It'll happen again. The other thing I kind of wanted to show on this as well, I think Carve was another good one that we had this week.
Before we
Yeah.
move on, did you guys mention in the chat what was the reason for that 600% pump, or is it just blocked?
No, there was a reason for it. They either announced something new that they'd be selling.
Just see if this opens up here. NEGG offers on-demand assembly of custom PCs. That was
Oh,
July.
yes, that's exactly it. Because Newegg, I've ordered from there before.
Yeah.
You're able to order the computer parts, right? Now they will build the computer for you, which is huge.
But
Yeah, so
I could swear they've always been able to do that. It was like $50.
Yeah.
Well,
we were talking about.
We
were talking about that the other week.
And then build them.
Yes. Yeah.
Yeah, we talked about that the other week. How these small cap companies will do that. They'll be doing something for years or months, and they'll just put out a press release saying that they're doing it, and then it just goes to the moon, right? But if you look in the filings, you'll realize that they've been doing that forever. But Brandon,
I actually didn't know that they were doing it forever. On a side note, I actually do need a new PC. I want to do a little bit of gaming, and definitely now that Newegg has the new NVIDIA 30 series cards, I'm definitely going to be buying a new NVIDIA card and playing some games, and probably ordering one from Newegg actually. So maybe they got I don't know.
Nice. Yeah, Brendan,
awesome.
just like, look, I'm just noticing this here as well. Just back to your point about whether or not you think Newegg is going to go up or down. If you look at this thing on the daily, right here, you got the similar kind of setup that we were seeing there, right? So if you look at that sort of pattern, right, and then we go back to.
But I don't like, just give it 1 second. I don't like how, so Newegg has really nice bullish confirmation on the RSI, but Carve on the daily has bearish divergence on the RSI. If you go Carve, so that's just what I see, but that's the first thing. But that looks like a bull flag to me on Newegg.
Mm-hmm.
Yeah, that's what I mean. Like if this thing snaps up, like you're gonna have a big move to the upside, right? So the tricky thing with these things though is kind of why I wanted to bring this up as well. Just word of warning, I guess you could say. Just something to keep in mind when you're trading these things. You always want to kind of know the flow to these things. It's just use it as a gauge about how quick they're going to move. Essentially, something that's a billion share float is not going to move very fast. Something that's 100,000 share float will move like crazy, right? So to get an idea of the real flow, because this is something you can use to your advantage. If you go to Filings Pro here, Filings Pro or FinViz, that's kind of probably what most people use to get their information. I like Filings Pro just because it's nice, like it's a little bit cleaner, a little bit more organized. Shows you all the whatever offerings and stuff they have down here. So if we go over to Carve here for a second, so if you look on here, it says the floats, 500,000 or whatever it is. Shares outstanding, gives you your market cap. Short float on this thing is 50%. Institution owned, 14%. So you can get all that information from FinViz as well. Shares float here, I got it highlighted, showing the same. Short float showing the same. But one thing you can do here is if you go over to like BAM SEC, this is a free website. I don't know if you guys have ever used this or not, but I have an account on it, but it is free. It'll give you most of the information you need for free. So if you type in, whatever ticker you're looking at, you go to the most recent filing here, and then all you got to do is just Control F, type in held by non-affiliates, and then you can see it highlighting right there, held by non-affiliates. So it says right here, as of June 28th, 2021, there was 3.467 shares of common stock outstanding, right? So it's you look over here on FinViz and Filings Pro, it's telling you there's 500,000, but you check the filings, it's telling you there's 3.5, right? So the float's way higher than everybody thinks it is, and that can play a big factor in how you're trading, right? Whether you're long or short, just to give you a better idea of how this thing's moving, how many people are short. So that's just I just kind of wanted to point out that little.
That's a really good resource, man. I think reading the filings and reading the prospectus, especially with these new IPOs, whatever, it is one of the most useful things that you can do, because a lot of the data that you find on these like third-party apps, they're usually not accurate. And there's a lot of things that you can find out about, like insider holding and share lockups. Like you get into an IPO and you don't know that, like, oh, on a certain day, 2-3 weeks from now, a bunch of executives have a bunch of stock that they can just let go and just dump the market. And as Kaylin's saying, it's really important to know the share count, like the free trading share count, because it's both a blessing and a curse. Like if a stock is in an uptrend and or there's really good positive news or like a nice press release, a little bit of buying can send that stock soaring 10-20%. But if there's bad news, that stock can just tumble and go right through support. And with the large caps, you don't get that because they are so liquid and there's so many shares out there. But it's really good. I think it adds to like the credibility that there's so many shares, there's so many holders, it's super liquid. You can sell, if you want to sell a share of Apple or a share of Amazon, you can do that in a second.
Yeah, for sure. That's why it's so important to watch for volume on these things too, right? Because once they start to thin up, you can get trapped and you can't get out of your positions. All right. Do you want to talk about moon mining then, or?
Yeah, why don't we end it on moon?
Guys, I love it.
Yeah,
smooth. But no, I just thought, so I'm still digging into this thing, but I just thought this is a really good example of how easily things can be dismissed, but then when you read into it, you're like, wow, there's something there. Because I think me and you, Brendan, we've talked about our feelings about Kathy Woods and ARK Invest, and then we questioned some of her decisions. The big one was space mining, asteroid mining, right? We thought this is like some Star Trek stuff.
Yeah, it's way into the future, we thought.
Yeah, and then and I didn't even know where the technology was, but then I started reading up on Starlink, and it led me to SpaceX, and it led me to a whole bunch of. I just went down the Alice in Wonderland there, and I found out that it's actually conceivable to be mining an asteroid within a decade. There's a giant asteroid. Sam, if you could, can't show the screen. Yeah, so there's a giant asteroid called Psyche. It's in our solar system, and it's the heart of a dead planet, basically. So when a planet dies, all the metals compress into the center of the heart, right? So it just becomes this giant hunk of alloys. And so there's, let me see if we can pull it up, but I think it's like 80-something% steel, iron, just the common stuff that we use. But there's still millions of tons of really rare stuff like platinum. And so this thing is about 185 kilometers in diameter, and it is massive. And it's like, if you were to do an exercise and you value this thing, you're buying it at 2 cents per kilogram. This thing is worth over $5 quadrillion, 500,000 quadrillion dollars. It's like, it's off the charts.
I don't even know how to process that number.
Yeah, like what do you even call 500,000 quadrillion? Not just
zero is that, like 20?
Yeah, I don't think my iPhone will do that calculation. But so like what makes it feasible is like, so okay, so we have the resource there, we know it's there. So what makes it feasible is the fact that there's a company called Relativity, and they're like a SpaceX competitor, but they're refining the ability to 3D print engines. They're printing rocket engines, and then their plan is to not only print the rocket engine, but to print the whole cargo ship on the way back too. So the whole idea is you just need a ship with propellant and a printer. That's all you need to get to that asteroid, and then whatever you need from there, you have the resources to make. Because the whole asteroid is basically metals, right?
Dude, it sounds like Minecraft.
That's so like I just picture like a bunch of guys sitting around. So like, okay, here's what we're gonna do. We're gonna build a printer. We're gonna send it up to this rock in the space, and then we're going to get it to make machines up there from the stuff on the rock and then send it back to Earth. Everybody's like, I love it. Let's do it.
That's the crazy part. They're actually doing it, and like so this is like how far ahead the crazy engineers, these space engineers, think, right? So SpaceX has an engine called Raptor. It's like one of the most advanced engines on the planet. It could do a couple things that no other engine can, including it has like the record for the amount of pressure it can hold. And so like if an engine has a lot of pressure, then you have a lot of lift, and that's what you need, right? But it also runs on methane, which is not what rocket engines usually run on. And the reason they chose methane was because this rocket is meant to take go to Mars. And so and Mars has a lot of methane. It's actually got a lot of CO2. So if you add H2O and CO2 together, there's two processes where you can turn it into methane. And so they're like, we just need enough fuel to go one way. We're gonna go there, synthesize what we need, and come back.
I love it, man. The future's awesome.
Yeah. What are your thoughts on Starlink? Because I know you're going to be a customer soon.
I don't know until I get it. No, I think it's really good. I mean, like like you guys were asking me like why I wanted to get it kind of thing, because I have I just have ExploreNet right now. It's just kind of like our just like a standard one around here. Bell was useless out here. They're gonna charge me like, what was it? It was gonna be like $120 a month. And then if I went over 60 gigabytes, it was like another $1 per gigabyte over that or something like that. So these guys are unlimited high speed. Like, I'm streaming with you guys. My wife's watching Netflix in the next room. I'm in the middle of the country. Like, I'm just on satellite, and they're $40 a month. So I'm gonna get Starlink as well. And the reason I wanted to do that was just because just for like trading and stuff like that, is I want to set up like a home like virtual private network, like a home VPN. And then what you can do is you can wire, 2 or 3 internet sources. So I could have like my LTE from my cell phone. I can have ExploreNet, and then I can have Starlink all linked into this one VPN that connects to my computer. And that way, if any one of those systems gets knocked out for whatever reason, it'll just keep seamlessly streaming data. It'll just pull on the other systems immediately. So that's kind of the reason that I want to get it. It's just kind of like for another backup. Otherwise, like, yeah, I'd probably, to be honest, just stick with ExploreNet, because it's like better than I thought it was going to be, I guess. But yeah, it's just kind of a redundancy thing, right? Because like obviously, like I live in the country, I don't have any hardwired internet, right? So if you get like a big storm or something rolls in, or like a snowstorm or something like that, it could kick it off. So having some redundancies is what a lot of the guys like. I did a lot of research, and there's tons of guys that are traders and stuff. They live out in the country, and they're like, yeah, I just have 3 or 4 different internet sources that all just run into my computer, and that way I can unplug one and my computer just keeps running seamlessly. So
Brendan, I wanted to ask, because I think a lot of people are thinking this. I know I am. Like, so they're talking about spinning off Starlink and then doing an IPO with it. I guess what are some of the things you would want to look at if you're looking to invest in that thing?
I really couldn't even tell you. I don't understand the business fundamentally. I haven't done enough digging there. I think it would be a long time, because I know that SpaceX did a private round of funding. What was it? About a year ago? I believe it was what, a $40 billion market cap?
I think they're up to 70 now. They might be up to
70
70,
now?
but
Okay, yeah. So maybe they
yeah.
did another one. But there's just a lot that I would have to look at, and I'd have to really understand the industry. And until then, yeah, there's really not much that I can say on that.
yeah,
Oh no, that's great. Sorry, Ken.
no, I was just gonna say, like for me, I just kind of like the idea of it, because like I know even like it's 2021 here. Like even my parents, like they live just outside the city. Like you can literally walk to the city from my parents' house, but they have a big property. Like they're in the country, so they don't have hardwired internet or anything like that. And they literally just as of I think only like a year ago, maybe a little bit more, were able to get high speed Bell satellite. So still not hardwire. And and they're literally right outside the city. So like to me, it just kind of if Starlink is going to be one of those things where they're able to take over, like when you think like, oh, we're going to just do rural areas, it's not like rural, like there's a couple people up in the mountains. Like there's whole cities of hundreds of thousands of people that are rural. So it's a pretty big market that they can capture. And I just think that like with the prices that he's offering, unlimited high speed internet versus like Bell or Rogers or any of the other big names that are out here, it's not even in the same wavelength as far as being close to competitive. So like I think as soon as that comes around and as soon as they have the capacity to, you know, set up like get their whole business model sorted out nicely, get enough customers up and running, I think that they're I just don't see them not wiping out Rogers and Bell as far as rural internet goes.
So
Interesting.
going back to your question, David, like I can't really talk about it industry specific or company specific, but like things that I would look at is I would
Mhm.
definitely want to look at like the addressable market and to see how big that market is. I would want to see revenue and I would want to see revenue growth. I'm not
Mhm.
sure if I would want to see profitability because
Yeah.
one, I don't think it's necessary at that point of the business. But like two, like would Tesla or SpaceX or whoever owns it, would they still own a stake? Like, are they kind of like piggybacking on them? Because then profitability, I think, would be less important. Um, and I would just want to look at the competitive landscape, like how many other people are doing this. And I'd want to look at like management and I would want to look at ownership, like who actually owns the shares. There's a lot of things that I look at, and it literally would be like reading through a 165-page prospectus and just doing all the digging there. And I would want to hear the corporate presentation, and I'd want to, just do more research on that, and I'd want to really understand it. But I think revenue and addressable market would be the two things that would be the most important to me personally.
No, I like that. I like that you said you want to know this company because I think that's a part that a lot of people miss. Like you
Mm.
really want to deeply know this company, right? I think one of the Buffett's examples is like, you know, you're buying a share as a shareholder, you're technically an owner of this company, right? So if I came to you, Caitlin, and I'm like, I have a restaurant idea, it's like, you know, let me like $40,000. You would really grill me, right?
Yeah, yeah, for
Right.
sure. That was one of the things that you taught me, David, at the very start. Like, because when I was first getting into investing, like before we started this show, you know, I was asking you, like, you know, what do you look at in a company? Are you looking at their financial statements and this and that? And you're like, well, yeah, a little bit, but not really. You're like, I want to know the CEO. I want to know how the business runs. I want to know what their factories look like. Like, I want to know the actual physical business, right? And like, I think that's a really key thing that both of you guys are kind of touching on is really understanding the business itself, like who's running it, who's in charge, how is it operating, you know, how are the employees, like just all that really like, you know, down to earth kind of stuff that actually makes the company run is kind of what, you know, I've gathered anyways. You can correct me if I'm wrong, is what both of you kind of look at as sort of probably one of your main indicators when investing in a company.
Yeah. I wanted to mention some
Also,
stuff to Brendan and see how if he would view these things.
yeah,
So like a few things I learned about SpaceX or Starlink in particular is like they have some technological advantages, right? So I did look up some competitors. There was a bunch of former Google employees that raised a few billion dollars to try to launch a competitor long before Starlink, and they failed miserably because they had one missing factor, which was the rockets, which is what SpaceX has, right? So when they launch their rockets, they're paying I think $5 million per rocket. That's the cost of building the rocket and to piggyback on the ship to go into orbit, and they're doing 5 at a time. SpaceX is doing 80 at a time with their own rockets, which are reusable, and so it costs them less than $1 million total. So I would just for you that would that be like a sufficient competitive advantage that would make you want to look more into this company? Like there's something there.
potentially. But let me ask you, who owns Starlink? Is it 100% wholly owned by SpaceX?
No, they have a lot of early investors. I think Google is actually quite a large shareholder. I
Okay,
think they
yeah. So I definitely want to look at the ownership structure. I think that would be probably the most important thing. Because if there's
yeah
a lot of big names and big people behind this, then that would be interesting. I don't see the reason right now in them going IPO.
yeah.
Um, Probably not even for a while, unless you have more insight on that. Um,
Yeah, Elon's just mentioned one thing. He's like because he gets asked that a lot, and he said he doesn't want an IPO until they're profitable.
Yeah,
Yeah.
which to me doesn't make sense because most IPOs that you see, in SPACs
Yeah,
coming on the market are nowhere near profitable. And that doesn't really make a lot of sense to me too because they have so much financial backing. Like, why would they want to um, basically jeopardize their revenue and their revenue growth and growing as a company just for the sake of being profitable. For me, that doesn't make any sense. I would rather a company focus on growth than focus on turning a profit.
I think what he was meaning to do was he wanted to spin off Starlink as its own separate entity. So he wanted that to be profitable, and it's a separate business. And SpaceX will still focus on going to Mars. So I think he wants to separate
I feel
two
like
businesses.
that's doing it backwards, honestly. I feel like I'd rather just grow space or Starlink in the best
Yeah.
way that I could. But that's Elon, and he has his own plans, and I'm sure he has a lot of very smart and very large pocketed investors whispering in his ear too. So I'm sure he's on the right track there.
Yeah, I just I'm gonna keep digging into this thing because I'm like really into this stuff. But
I really want you to, because we've discussed about doing like an entire episode. If we could do like a 30 to 45 minute sort of episode and sort of feature that, and we can make it real cool. Maybe we'll show like some videos or something on your screen, whatever is available. I think that'd be awesome.
Yeah. What are you thinking? I think so. Maybe the idea is this: I'll gather my research and I'll gather my thesis, and then I'll basically present my thought process for like an investment in the show, and you guys can add your commentary and criticisms and whatnot. I think that'll be pretty useful.
Yeah, I think that'd be great. I'm really interested to hear what you have to say on that stuff.
Yeah, and I think there's a lot of other people out there that want to hear about new, unique businesses, especially when it pertains to like space and connectivity and all that. We're seeing like Richard Branson go to space and Jeff Bezos and everything else. Like, it's like this new frontier. Like people are very excited. Like you're talking about mining asteroids, and we're talking about, going to new planets and colonizing Mars, and everyone's getting so excited about like UFO sightings and like potentially like intelligent life out there. Like definitely a lot of exciting things in space, and there's probably going to be some investments there. Like I wouldn't be surprised if there's a bubble in the future, something really similar to cannabis and similar to crypto, where people are like getting into space companies, and we have these like space companies just going IPO like every day. And like if you have the word space in your company name, like your company goes up 1,000%. Like I could see a future where that happens. I know it's really like bold to say, but could happen.
Yeah.
I'm gonna make a note. Episode 27. We're gonna flip back and we're gonna be like, you nailed it.
Yeah. What was David? What was that one back in the Bitcoin days that they changed their name to? It was like a tea company.
Long Island Iced Tea.
Yeah, and they changed it a lot, like blockchain.
Long Island blockchain. And
yeah, that was my favorite one.
That was as close to the top as you possibly could. The other one is Eastman Kodak, which like
Yes.
Okay, yeah.
like one of the biggest companies in the world. Like it was on the Dow.
Yeah.
Like photography was a big business. I guess, David, you know more about that, but I guess before everything went digital, and they changed their name to what? I don't even know what.
Similar kind of thing, but they just threw blockchain in the name.
Kodak coin. That was it.
Yeah.
Yeah.
Those are my favorite, man. I love those. Those are the best. Long Island Iced Tea, Long Island blockchain.
Well, it's funny because these things, they're like kind of the canary in the coal mine. Like when these things happen, you know that
It's
you're
a bump.
gonna hit peak enthusiasm. Like I remember telling people when Coinbase went IPO, I said, this is peak crypto right now. Not to say there's not going to be another crypto bull market, but for the time being, like this intermediate cycle, like top for sure. And that's exactly what happened. So, you got to really not let the enthusiasm of the crowds, the madness of the crowds, as they say, really affect your thinking. And we're good that we all keep each other in line here. Yeah.
Yeah.
I think that's a good way to end today's episode.
I think so too.
We got a lot of good information here.
For sure. We'll be back in 5 years with all of our small cap space names.
Exactly. To the moon, literally.
Yeah, to the moon.
All right, guys.
All right, let's end it there.
Later.